Hello traders, welcome to Snipe the Trades weekly market overview. I'm Orlando and today we're going to review what happened over the weekend in Japan. This is the weekly review from July 11th to the 15th, 2016. So what we're going to look at is the re-election of Abe Shinzo in Japan, and as he got re-elected, he announced a new stimulus package. Okay, now after the announcement of the new stimulus package, the Nikkei opened up and soared 850 points, and the yen depreciated 2%. That means that if we go to the charts, we're going to see that the US dollar yen actually rose about 250 pips, if I'm not mistaken. But some of you might not know about the move or the fundamentals of the move, but it's because Abe announced a new stimulus package. But as you can see, Abe did not give details on the size of the package. But Japanese stocks jumped nearly 4%, and the yen weakened over perceptions, and landslide victory in upper house elections now gives him a free hand to draft economic policy. Okay, now it's important to understand that, of course, the yen is going to depreciate on a new stimulus package and Bank of Japan intervention, but because Abe did not give any details on its size and structure, I think that this is just a reaction to the news, and we can have a very good selling opportunity until we have confirmation of this package by the Bank of Japan. So let's jump into the charts, and first of all, I want to look at the E-mini S&P 500 hitting all-time highs today. Well, that's a new record for the E-mini or for the S&P 500. But let's go and let's take a look at the US dollar Japanese yen. And here is the move that we were talking about when Abe got re-elected, and of course he announced the new stimulus package. The US dollar Japanese yen has risen about 210 pips. Okay, and I just added the percentage indicator to my chart, and as you can see, we have risen 2.2% just today. All right, now, and what we want to do now is we want to look at where this pair is trading at. Okay, you can see that right here we have a very important zone where we might find sellers. Now, remember that we already talked about the BOJ intervening with a new stimulus package on the Japanese economy. Now we are going to talk about the specific technical levels that we are working with right now. Okay, now there is a big zone of resistance right here, and as you can see, when we broke to the downside, price tested it once, twice, then faked out of it, and then run down from it for about 260 pips, and then it bounced off the 113 of this move up. All right, so let me point out this move because it's important for you to understand that the 113 that we bounced off of, it's from the last leg of the move down. All right, so we are going to make this thicker so you can see where we are or what we're talking about. So we hit this zone of resistance, and then we spiked lower at the 113 where buyers got in, and this looks like a very strong, actually a very strong sell stop hunt. I'm sorry, a stop loss hunt, because we do have a test right here, and then buyers got a second test to trade the bounce, and then of course these long stops got hunted, and now we are up about from the low, from the 113 to the high, we are about 280 pips on the run. All right, so basically we are more than 2%. We have moved more than 2% today. We have hit a major area of resistance at the 102.90 level. We have hit the 213 Fibonacci expansion level of this last leg down, and we are about well, we are in the zone of the 88.6. All right, now what we can say here, let's add the 227.2 Fibonacci expansion to well, to our chart to see where it's situated. 227.2. All right, so let's do this, and the 227.2 is located right at the 88.6. So basically, I think that this is a very good spot to sell this currency pair by buying yens, because remember, and I'm going to point it out again, Abe did not give any details on the size of the package. So I really think that this is a very strong reaction to the news that we will have another stimulus package coming on the Japanese economy, but because we haven't had any details on its size and structure just yet, I really think that we can move down again before breaking higher to higher levels. All right, so basically I would put my stop loss all the way up here. And of course, this is what we do. This is what we did this morning, and we are only risking 1% on our account on this. We're reversal trade. All right. So if we go back, this is all that we can see right now on the US dollar Japanese yen, and we're going to go to the GBP yen, because the GBP yen is a very interesting pair at the moment. One, because we just had the Brexit, on which the pound depreciated strongly, sending this pair to the 129 level, 128 level. Okay, and now the yen is depreciating because of the news on the new stimulus package in Japan. This means that not only the GBP is threatening further downside, but also the yen. So here we have a war between which of the two currencies is stronger, and my money is on the pound. And not only that, we have hit, or we are about to hit, a very strong level. All right, we have tested these levels once, and then after it was tested, bulls took this pair up for a 520 pip ride. Then it was tested again, but eventually we broke to the downside, and when we broke with this level, sellers took this pair for a 478 pip ride, which means that this is where sellers are going to be preparing, or are going to be loading their orders. All right, it's going to take a lot of buyers for the pound yen to break through this level, and will clear all of these buy orders. Now we are also approaching the 50 level of the entire move to the downside, and if we want to see what Fibonacci levels we are working with, we might look at the 161.8 and add it to our Fibonacci expansion settings. I said the 161.8, right? 61.8. So we are going to put the Fibonacci expansion 161.8 on the description of our level and see if we are approaching it. And as you can see, the 161.8 hits perfectly with the 50 Fibonacci retracement level of this move down. Okay, so this is a very strong zone on the GBP, or the GBP Japanese yen, and this is a pair that we trade a lot here at Snapshot Trade, because not only it yields great runs, but it also yields we have very clear moves once levels are broken with. All right, so we can expect a bounce from this 161.8. At least that's what we expect, but we really need to see some more reaction. Let's just thicken this chart out, and let's take a look at what has happened yet. Let's thicken out this red line to see where the real level is at. So we haven't hit the level, we haven't hit the 50 Fibonacci retracement level, but I do think that we need a further reaction, or a further bearish reaction out of this level. If not, we can test the 138 or 135.80 again. But I really do think that after a move or a reaction of 320 pips out of the GBP Japanese yen on the news of a new stimulus coming out of the BOJ, well, we can have a retracement back to some of these previous levels, mainly because we are going to find sellers here and because this is just a reaction to a news. Okay, the actual stimulus hasn't been implanted yet, hasn't been released yet. We don't even know the size of it. So I do think that this is just a reaction to a news and we are going to go lower, or maybe just test the 129.60 level again. In any case, if we do break to the upside, well, we can expect a test of the 135 level, which would mean that we could actually be trading the long side of it right here at the 50 and the 161.8 for a nice, well, 198 pip run. In any case, these two scenarios seem plausible to me for, well, at least for the immediate time and a retest maybe of these highs and lows. So this would be a very interesting spot if we get here on the short side, because after a test of these levels we might move slower again before we move higher. All right, so I mean, these two scenarios seem very plausible. We just need to have a clear reaction of these levels. We haven't had the clear reaction to these levels, even though we had some indecision candles in the past 2 hours or so. Buyers are still trying to push price up, and well, the real bearish reaction to these levels hasn't happened yet. But if we do, we can anticipate a 240 pip run to the downside before real bulls step in and crush this pair up. Now, we do need to take the previous lows, and let's go to the 50-minute chart to and see if we can actually look at the previous lows on it. All right, so this is the 50-minute chart, and as you can see, we have made a high, we have made a low, we have made a new high, a low, and a high. So I really think that we need to oops, I'm sorry, I'm gonna change the line. We really need to break with this low before this pair turns really bearish. Maybe I mean, maybe these lows are a good example of the lows that we need to break in order for this pair to get real bearish on us. But again, we are just chopping right here at this level that we just pointed out. Now let's have a look at the pound and what the pound is doing right now. Well, as you can see, we are in a very strong down move since the Brexit. We have moved from the high of the move to the low of the move about 2,200 pips. All right, so the pound is really getting crushed, and as you can see, we have made some continuation patterns in the past, and I really do think that we are in a continuation pattern for a pound depreciation move. And the reason is that we are trapped inside of this well, this range at the moment. I mean, we are really trapped inside of the range because we haven't tested the highs and the lows of the range well, quite heavily as I wish to call it a range. But as you can see, we have been tested it over and over. But what I really want to point out is this continuation pattern. So I'm going to delete these trend lines and redraw. I'm sorry, I'm going to delete these trend lines and redraw the continuation pattern that I'm talking about. As you can see, we are trapped inside of this well, this range, and it's quite the range because it's 180 pips from the highs to the lows. But it's getting really hard to trade it just because we are chopping in the middle a lot. I wouldn't really trade it, and we wouldn't really send a signal until one of these two scenarios happen. So let's have a look at what's going on. We are right here testing the high of this descending resistance, and right here we have a rising support. Okay, so we are in another wedge that could lead the pound lower, and a break of the 128.52 level. So we are right here testing this descending resistance, and what could happen here is that we break to the upside, we retest the broken resistance, and right here we would have a very nice buy signal or buy trade for about 170 pips. But I'm going to delete this because this is very speculative, and I don't like to trade speculative setups. But what I'm expecting actually is a break of this ascending support and a break of the 128.52 level. Now, if we break with the 128.52 level, right here we are going to go lower. All right. Now, where are we going to put our targets? Some might ask. Well, that's easy. We are going to calculate from the high of the top of this wedge, and it's about 250 pips. So I would put my stops or my my profit taking target 250 pips down at around 120 or just above the 126 level. Now this is what we are expecting for the next week on the big movers, and on the end of the commentaries we are going to review what has happened with these pairs, and of course if we have any trades on them we are going to analyze its results on the other series called Trade Review on our YouTube channel. So if you want to get notified when we go live for the end of the commentary, just subscribe to the YouTube channel, and of course you can always follow our trading signals and be part of our live trading room by subscribing to our services at www.snipethetrade.com.